Welcome back to Chairman's Briefing. Here we cover mining stories of the week. I'm Rachel Lee. Let's get into it. Gold is consolidating its recent gains after printing two back-to-back weekly closes above $2,500 per ounce. I want to mention, though, that the metal is stuck below the key resistance level as traders wait for additional catalysts. According to an analyst at FX Empire, the technical setup is bullish, but gold needs to settle above the $2,530 level in order to gain upside momentum. Fundamentally, the certainty of rate cuts in September is buoying optimism for continued gold price appreciation. Fed Chair Jerome Powell did not mince any words during his anticipated speech at Jackson Hole last week. Quote, "The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks." And there it is, the Powell Pivot. According to Jay Hatfield, CEO of Infrastructure Capital Advisors, Powell's pivot on rates represents a watershed moment for bullion. Hatfield is now long gold options for the first time in years. But of course, an advancing gold price generally means a weaker U.S. dollar. The greenback has lost nearly 6% of its value over the past 2 months, as measured by the dollar index, which pits the dollar against a basket of currencies that include the euro, Swiss franc, Japanese yen, Canadian loonie, British pound, and the Swedish krona. Florian Grums, managing director at Midas Touch Consulting, characterizes gold's uptrend as relatively orderly and that there's still room for it to move higher. Quote, "The fact that the rally, which started on October 6, 2023, has not yet had an overshooting finale suggests that there's still significant upward potential." He also said that typically months-long upward movements in the gold market have always ended with a vertical overshoot, where the gold price could achieve enormous increases in a short time. This was always followed by a brutal crash where all gains from the final exaggeration phase were quickly lost. After carving out a low earlier this month, silver has been stubbornly chopping on both sides of its key resistance at $30 over the past few sessions. Some believe this buoyant behavior is a prelude to a significant breakout to higher ground. During its recent full-year earnings report, BHP offered its take on the copper price for the short term, warning of a modest global surplus for the end of 2025 due to weaker than expected Chinese demand. Longer term, BHP holds the widely held view that the green metal is eventually headed for severe shortages and significantly higher prices later this decade, driven by a prolonged worldwide deficit. BHP stated in a commodity market overview, quote, "With the deficit conditions we anticipate in the final third of the 2020s, it's possible that we enter into a fly-up pricing regime, whereby prices disconnect from the cost curve due to systematic access of demand over supply amid inadequate inventory levels." Share prices and volumes across the uranium arena saw a solid bump in recent sessions as the world's largest uranium producer, Kazatomprom, slashed its 2025 production guidance by 17%. The Kazakhstan state-owned uranium miner said that'll produce between 25,000 tons to 26,500 tons next year, which is higher than the 2024 output, but short of levels required to support agreements to produce uranium within a specified range for the year. Project delays and sulfuric acid shortages are to blame for the miner's production cut. In a market suffering from a severe structural deficit amidst surging demand, the supply shock, which is a cause for concern for Western utilities, may also be setting the stage for a sustainable rally in both the metal and the equities that produce it. Cameco Corp's shares jumped 6.8% in Toronto, while NextGen Energy surged more than 11% at one point. Denison Mines also jumped as much as 16%. Now, as the demand numbers continue to ratchet higher and supply numbers continue to wane, the founder of Segra Capital Management, Adam Rodman, is looking to accumulate North American uranium miners as a result. Segra Capital currently holds a position in NextGen Energy. Without a doubt, junior explorers tagging significant and new high-grade discoveries are likely to draw heaps of interest with this increasingly bullish backdrop for uranium. The strike at the Caserones copper molybdenum mine in the Atacama region of Chile is over, as signatures have been put to paper on a new offer. After disrupting production for the better part of 2 weeks, 90% of its union members voted in favor of a new wage proposal from Lundin, part of a 3-year deal. This dispute was all about wages. Now, the terms spelled out in the deal include a 2.5% salary adjustment, a signing bonus of roughly $19,000 per worker, incentive improvements, and a soft loan of $3,300 for each worker. Lundin said this all in a statement. While some of the world's biggest miners celebrate stellar Q2 earnings reports and record-breaking gold prices, Johannesburg-based Gold Fields were dealt a blow in recent trading sessions after the company reduced its production guidance for the second time in less than 3 months. Harsh winter weather conditions that hampered ramp-up efforts at its new Salares Norte mine in the Atacama region of northern Chile were cited as the most pressing challenge. CEO Mike Fraser told Reuters last Friday, quote, "The massive lesson here is attempting a ramp-up during winter." Fraser went on to say that despite the delays, the $1 billion mine is still primed to usher in solid returns after starting production in March this year. Viewed as the world's next frontier for copper extraction, due in part to a new incentive regime, major players like BHP are getting positioned in Argentina. President Javier Milei is aiming to light a fuse with the law passed in late June, promising lengthy tax breaks for investments pledged in the next 2 years. This is a bid to allay investor fears and offset capital controls. Though highly geologically prospective, the country shares a long border along the Andes with Chile, the world's top copper producer. Argentina has almost no current production, but it's determined to rank among the top 10 by 2030. Right now, there are 8 major projects in various stages of development in Argentina's mountainous north. According to the government, the potential pipeline of projects could offer production that matches Australia and Zambia's output by the end of the decade. Back in mid-May, Red Pine Exploration announced that its former CEO allegedly tampered with hundreds of drill core assays before sending them off to be deployed in a 2019 mineral resource update for the company's Wawa Gold project in Northern Ontario. At the time, the stock took a substantial hit in the wake of the revelation. Investors lost confidence in the validity of the company's flagship assets. However, this week, the company restored some confidence when they announced an independent mineral resource estimate, clocking in an increase of approximately 150% in total ounces of gold. 1 week after PricewaterhouseCoopers took over Victoria Gold, cleanup efforts are now focused on groundwater monitoring. 5 new wells are being installed to assess contamination risks. Meanwhile, Yukon's government is finalizing plans for an independent investigation into the June accident. With winter coming, critical remediation work is underway, backed by a $50 million Canadian government payment. The total cleanup cost could reach $150 million Canadian dollars. Now, despite all of the ongoing challenges, officials haven't ruled out a potential restart of the mine in the future. Lucara Diamond found a colossal 2,492-carat diamond from its Koroa mine in Botswana, making it the second largest rough diamond ever found. Lucara did not reveal the diamond's gem quality, but it did reveal the size, larger than a tennis ball and several times heavier. This find is just second to the 3,106-carat Cullinan diamond. The Koroa mine remains one of the highest margin diamond mines in the world, producing an average of 300,000 high-value carats each year. Astroforge, the most advanced private asteroid miner to date, has an ambitious plan to harvest precious metals from asteroids. With $40 million in funding secured and previous setbacks behind them, the company is currently preparing for its 3rd mission set for next year. Geologists say that the asteroids orbiting Earth are likely packed with iron ore, nickel, and precious metals at much higher concentrations than those found on Earth. making up a market valued in the trillions of dollars. And there you have it, another week of mining highs and lows. Make sure to subscribe to get these insights delivered into your inbox every Thursday morning. Or if you prefer your news here on YouTube, smash that subscribe button and bell notification. Thanks for being a part of Chairman's. We'll see you next week.